Yeah, you can buy virtual gift cards at JR Cigar. All right. All right, so everything is started. Everything's good except, as I explained, everything to my right isn't working today. It's not my computer because it's all one computer. But that particular MT4 platform isn't running profiles, so I don't know what's going on the dollar in the last couple hours. I rebooted and nothing works. Nice, nice. I did reboot. Don't reboot. So, anyways, without further ado, let's share in the excitement. Let's share in the good karma by playing the happy music, and then we'll get going to do some trade analysis. Right? Nick's all happy we got the Aussie yen perfectly yesterday. You're welcome. Compliments of Forex.Today. Oops. So let's go, 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 go! Life is great, life is grand, life is good, life is beautiful. Oh. Hey, 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 hey there, Freddy boy, and how do you do to you? Hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm a foreign exchange trader, been doing this a long time. And I am here because TradersWay wants you to be a success. They would like you to succeed sooner than later. The whole idea is if you pop 500 or $1,000 into a TradersWay account, they don't want you to blow up your account. See, that's what most amateurs do. They pop $1,000 in an account, blow it up, and go somewhere else. Well, they want you to succeed so that you can trade day after day, week after week, month after month, year after year profitably. And they'll be your prime brokerage firm for your successful Forex trading business, and they'll execute your trades quickly. They'll provide customer service when you happen to need it. They'll be a business partner. How cool is that? I mean, they're not right. I mean, right? You need that, right? If you're going to be a small business, you're going to need to rely on your service providers heavily. So if they can help you in that way, then you trade and trade and trade and trade and trade. Of course, brokers make money when you trade. Some brokers make money because they bet against you. They figure if you put in $500, you'll never be successful. They'll never enter the trades into the real intermarket, and they bet on the fact that you're going to blow up your trading account. And then they get to keep the $500. How about that broker that said that they're a non-dealing desk? And then there was trouble in the market and they lost money. All their clients lost money and the company went bankrupt, or almost went bankrupt. Well, what was that about? I thought they were a non-dealing desk. Anyways, I do these sessions 7:30 in the morning, Monday through Thursday, here at Forex.Today. Where? Forex.Today! Every Friday, I'm at fxstreet.com. You will have to pay money for that because that is a premium session. I'm also Forex Speaker of the Year at fxstreet.com. And I've been doing webinars at FX Street 12 and a half years. Richard wants to know the maximum lot size of TradersWay.com. Well, you know, how do you answer something like that? First of all, I know people that trade millions and millions and millions and millions and millions and millions, 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 millions of dollars, and they trade 5 standard lots at a time. It's not a big deal. 500K per trade. So if you're trying to do 500,000 per trade, but you only got $50, we're not going to let you do it. So maximum lot size. Well, your lot size should be so small relative to your account size that that would never be an issue, really. Unless you're as big as a central bank. I mean, I don't know. That's just, I've never been asked that. It should never be even a thought. All right. So hey, what are we gonna do now? I ran the music, did a disclaimer. I guess we'll just go to the charts. Did I miss something? I feel like I missed something. Happy music, disclaimer. Yeah, well, Richard, a couple of $1 million in a trading account is not that huge, but I don't know. Send me an email. We'll talk, baby. Wayne at fxbootcamp.com. What is an ECN account? That's where an account, your trade gets entered directly into the interbanking system, right into the interbanking market. There's no spread, but you pay a commission. Okay, so that's called a hard dollar fee. A soft dollar fee would be where you pay a spread, so you don't pay like $7.95, whatever, right? Um, you pay through spread, and that's a soft dollar. You don't really see it. There's no like commission that you pay up front. It's just cost of doing business. So, Jeffix, Johnny, come on, Johnny. Johnny's an angry, bitter old man like myself. Come on, Johnny. So, would I recommend it over spread? What's the difference? I mean, whether you pay up front or pay in the spread, it just comes down to how you'd like to pay your fee. Okay, so it depends, but at the end of the day, it doesn't make two hoots difference. To me, the big difference is variable spread versus fixed. So I guess you could look at it as like a fixed spread, like it's a fixed fee, right? If you want to look at it that way. So if you were going to scalp a news event, like non-farm payrolls, retail sales, ISM, all these things can affect the interbanking spread, and it has to do with liquidity and or lack of liquidity in the interbanking system. It's not necessarily your broker. Now, you could have an unscrupulous broker that jacks up your spread to take advantage of you, but we don't do that at TradersWay. So it really just gets reflected because we're a true ECN. You'll see that, for example, during the um, the Swiss National Bank debacle, where one of the biggest brokers, if not the biggest broker in the world that says they're a non-dealing desk, got slammed by the Swiss National Bank. That big giant broker that's a non-dealing desk almost went out of business. In fact, they had to get bailed out at the end of the day. They literally bailed out. They had to borrow, what was it, 500 million bucks, because all their clients lost money. And suddenly an account, right, went from 5,000 bucks to negative 10,000 bucks, which isn't technically supposed to happen. So how is that even possible if you're a non-dealing desk, right? Whoops. So at TradersWay, we went through the exact same problem as these giant brokers. By the way, Alpari actually went bankrupt and went out of business, right? This other giant Forex broker um, almost went bankrupt that day, right? What happened to TradersWay.com? Nothing. They were fine. Totally fine. Why? Well, because the client's trades are in the market. It wasn't sitting at TradersWay. It was in the market. They actually did what they said they were going to do. Take the money, put it in the interbanking system like you asked. Right? So anyways, oh yeah, going back to the ECN, or fixed spread, if the spread jumps because of liquidity issues, whether there's lots or little, right? The spread can change in the interbanking system. That's how it works. It's changing for Goldman Sachs and JP Morgan just like it changes for you. Okay? And so if you're scalping, you kind of want to know what the spread's going to be, what the cost is going to be. Because you can look at it another way. If you trade 1 second after non-farm payrolls, your cost for one standard lot might go from $25 to $55. Why? Well, the spread widened. So it's your cost, But if you had a fixed spread or going through an ECN, then you know your costs up in advance and you can use it to scalp. Now, generally, however, a variable spread might be better. So what you end up doing is you might have multiple accounts, one for scalping, one for spot, one for swing. They also may pay different swap yields and stuff. So, negotiate with your broker. So, for example, if you have a couple of $1,000,000 to put into your trading account, you can call up your broker and probably get a better deal than the average dude. Either lower fees, but I don't mind fees, they're just tax write-offs, or perhaps you get a better yield because you're a big boy. And you say, well, I want to have an account that does nothing but carry trade. So I'm looking for better swaps. And I'm a big boy, I'm going to put in, $3,000,000. And you know what? You got a good negotiating place to start anyways, right? UK clients are fine, Richie. All right, so anyways, whoa. Let's move on.com, but I'm always here to answer your questions, okay? Okay. No way to account for spread for tax, so commissions are the way. Yes, so that may be true for you, but not for me, so on and so forth. So that's why it's your way, a trader's way with Trader Wayne, right? If you want the variable spread, if you want the fixed spread, if you want the ECN, we have them all. Pick the one you want, whatever's best for you and your location with your tax situation and all that kind of stuff. Your tax treatment might want you to have the ECN so you can write it off on your tax. Great. In another country, they wouldn't want that. In another situation, if you're a money manager, you might want the spread account, the variable spread, because you get, some soft dollar action on there. Boom, 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 whatever, man. Do what's good for you. We'll set it up. Just tell us what you want. Okay? All right. Okay. Okay. Japanese preliminary PMI. This is the manufacturing side of the business. Highest since March 2014. Output increase. New orders increase. New export orders increase. Employment increase. Yeah. Woo-hoo-hoo-hoo. Good job, Japan. Okay. The Japanese manufacturing sector started the new year on a strong footing, according to the survey. Manufacturing conditions improved at the strongest rate in nearly 3 years, helped by solid expansions in both output and new orders. The rise in total incoming new orders was driven in part by a sharp increase in international demand. Whoop, whoop, whoop. That's macro. As new orders rose at the quickest rate in over a year. Meanwhile, inflationary pressures picked up to the greatest since March 2015. Nice, huh? Isn't that pretty? That's some good. There's a lot of clues in that, huh? The rise in total incoming new orders was driven in part by a sharp increase in international demand. That sounds good to me. Huh? If you're a macroeconomist, you might want to put that down on the things are getting better side of the checklist. All right? Right? Cool. Okay. Progress of China towards the inclusion in the MSCI, that's the basket, may be halted if it cracks down on capital outflows. If they reverse course and they restrict the outdoor, then how can we include it? Yeah, it makes sense. So China wants to be taken seriously globally as a floating rate country, but it won't let its rate float. So there you go. French preliminary manufacturing PMI, fourth month of expansion. On the services side, seventh month of expansion. New orders, fourth month of expansion, highest since August 2011. Huh, we're getting some good numbers even out of France. So you know what France is going to do next, right? Topple their government, put in a socialist pig dog, strike, and then crush their manufacturing PMI down from 53.4 down to 0 if they can. And then raise taxes. We strike, then we smoke. Yeah, cool. It's like the French national pastime, huh? Things are good, good. Let's strike. All right. So what else is going on? German PMI, 26th month of expansion. Nice. Is that great? On the services side, 43rd month of expansion. So compare that to France. It's got like 4 months in a row of decent numbers. How about 46 months in a row? New orders, 26 month of expansion, right? Much higher than last month. Best since January 2014. Good, 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 huh? Eurozone, 43rd month of expansion. Yay, everyone's doing good. How about UK public finances? Highest since December 2008. Uh-huh. And then, wah, wah, wah. British Supreme Court upholds earlier ruling on Article 50. They reject the government's argument. Well, of course. See, if you are on the Supreme Court and you agree with the government, even if you want to, it looks like you don't have independence. You see what I mean? They're like, oh, well, they're just doing what the government wants to do. So they've been raised like chickens in giant Supreme Court justice farms, and it's just part of the breeding to say, well, if the government asks you for something, reject it. Right? So, anyways, that happened. Oh, but in true British or English, I guess you'd say, in true English fashion, they don't need to ask Scotland or Northern Ireland for permission. Aye, there's a wee bit of difference between Irish and Scottish. Yeah. So, anyways, England says, yeah. F, F you, Scotland and Ireland. But, again, that's not a shock. How about this? Turkey stopped cutting interest rates. Uh-oh. Uh-oh. Turkey did not cut interest rates. Did we hit the floor? The floor? Did we hit the floor? The floor for interest rates in Turkey may have been bottomed, right? I discovered 8%. 8%. Oi, huh? That's as low as it's going to get, boys, ladies and germs. Let's go Euro try. So, luckily, it seems pivot points still work. The bottom this week is the weekly central. The top this week is the weekly R1. Huh. Whale oil B. MR fish. So this should actually head down because if they're not going to cut lower, then that should be the weakest the currency is. So like, let me switch this back. Let me switch this to dollar try. Okay. Turkish lira has not been strong for a while, huh? Amazing, huh? So if they're not going to cut interest rates further or farther, depending on what part of the planet you live on, maybe we got a new thing going on. Another way of looking at it is if the lira won't fall any farther, is this the quote unquote all-time low? And what if it only went up? Or in this case, USD Turkish lira didn't go down because I don't want to short sell dollar, but you could maybe short sell euro, right? So that's why I had euro try. So what if you were, let's say, neutral, but would like to buy Turkish lira for the long term, with the only idea that it can't fall further, but you're happy to dump euro. Okay, so let me put it back because I just can't sell dollar. I just can't. I don't even want to look at it. All right, so anyways, go to this now. What if it's a top here, okay? And over the next course of time, you start buying Turkish lira. I'm not recommending it. I'm just saying it's a thought process here. So if it won't weaken further, maybe you buy it because that will be the weakest it'll be. It'll probably be weak for a long time, but just not weaker. That's a floor. And what if you're happy to sell euro? Well, when euro's weak, if the Turkish lira just stays neutral because you believe it won't get weaker, then maybe at the bare minimum it does move down a bit, right? Well, what's the upside to this? If you're short euro Turkish lira, yeah, rollover being what, 8%? With some leverage, you're looking at 800% a year. Excuse me? What? What did he just say? Yeah, how would you like to earn an 800% annual yield? What? Why don't you just stand on the corner of your local financial district and hand out pieces of paper that say, how would you like to earn 800% interest payments? Is that better than your checking account or your savings account? Is that better than your treasury? Is that better than your tax-free municipal bond? I mean, what? Because you're at 8% on not the money you leverage, which is your margin. You're at 8% on the money you borrowed. That's your leveraged money. So if you're leveraged 800 to 1, sorry, 100 to 1, you've borrowed 100 more than, so again, if you had $1,000, right, that you wouldn't earn that, right? And you put that into a trade, now you can borrow 100,000. You don't get your 8% on your $1,000. You get the 8% on the $100,000. So if you've collected interest payments on $100,000 at 8%, but you only have 1,000 of your real money, then on your real money, you're earning 800%. Holy smokes! Right? Plus the negative interest rate out of euro, but whatever. And then plus the pips. I don't know. It's just fun. It's just fun. So when I see that Turkey did not cut interest rates, I go, what? Strange, huh? So, anyways, somebody somewhere out there is thinking that, right? So they're like, Turkey interest rate decision, boom, what? Ugh. Right? Everyone's like, it came out, and everyone's already short, or in this case, long. Then they're like, what? They didn't cut? Look at that. 1 minute, the decision came out, and they're like, what? Nobody expected that, huh? Everyone was ready. Everyone was ready to sell Turkish lira on an interest rate cut. And then they're like, Demessa, what? They they didn't cut? Holy smokes, right? Tino says that's an awesome carry trade. Well, there was a time where New Zealand paid 8.75. You had to pay Japan 0.25, I think it was, um, on the yen that you borrowed. So you borrowed yen, right? So you go to a bank. Hey, Bank of Japan, I'd like to borrow yen. And they're like, fine. The interest rate on this loan is 0.25%. And they're like, yeah, great. So now you got this loan. They've given you this loan. It's real money and you have to pay interest payments on it. Great. And then you decide to invest the whole wad into New Zealand. So you pop the thing, you convert it into New Zealand dollars, and you pop it into a bank account, and they pay you 8.75. Holy smokes. This actually happened, guys. This actually happened. So now you're earning 850% because you're earning 875, but you got to pay 25. So the yield differential is 8.25% on your leveraged money. So remember how the paper trail works. You have $1,000, let's say, in U.S. currency. Then you go and you use that as collateral on your loan from Japan. So now you have a loan in Japanese yen. Then you take that and then you stick that into a bank account after you convert it into Kiwi dollars. Then you stick it into a bank account in New Zealand. So you've leveraged your $1,000 to get yen and then converted your yen into Kiwi. Okay. Meanwhile, you're collecting interest on your deposit, paying for your loan, and then converting all that back into dollars. And you're like, yeah, so it's pretty straightforward, pretty easy stuff. But 850%, right? It's pretty nice. Put it differently, If you had $1,000 in your account on January 1st, by December 31st, you have almost $9,000. And all you earned was interest. You didn't even make a pip. All right, cool. Neat, huh? All right, so anyways, let's move on.com. That's just food for thought. Imagine the levels of inflation countries like Turkey have. I suppose if you're South African, you know, huh? You can feel it coming. The the destructive value, the destructive impact of high inflation. Huh? And remember, everything's relative. So when I was in South Africa a year ago now, almost, not quite, but you know, that was the best the South African rand had been in a long time. And yet, you can sit down at a nice restaurant, order a nice meal with nice service. The sommelier brings out a bottle of wine, and it's $15 for the wine. $15, right? And then I say in my mind, oh, in America, right? You go to a place where you have a nice meal, and a sommelier brings out a choice of wines from Napa to your table. You know, what would you like? I'd like this one. Yeah, it'd be $130, not $13 for the bottle of wine. Yeah. Ah. Anyways, so that's the destructive power of inflation. So the funny thing is, if I went back now, the bottle of wine would still, to me, still be $13. I don't think that the wine would change that much. But to a local boy buying the wine, it would be more and more expensive as inflation goes up and up, just because they're in rand. The the bottle of wine will change. Oh, what are you guys saying? But if you drag MT4 horizontally, what happens if you drag? I don't know what you're talking about. All right. So let's do super. All right, going over here. Nick says he made money on the Kiwi yen trade. So yesterday I was long. Let me do this. On the Aussie, I was long based on the carry trade. I'm still long. I was supposed to get out, but whatever. So this is the buy zone that I had yesterday. I'm not happy where we are, and I could have gotten out. Maybe I should have gotten out, but I haven't. I don't know. I guess I'm trying to be patient here. I'm still not through the S, so there's still an SR. I don't know. Maybe this isn't a good trade. But anyways, yesterday on Monday, we were sort of in here. We'd already gone through the weekly, but I explained why I took the trade, and that you can see I'm longing it right off of here, off the weekly central. My weekly swing trade idea is long from this zone up. Okay, as you guys know. All right, so now we go back. What did I say yesterday? I said if you were looking at this from a bearish point of view, and remember New York yesterday we were here. I said if you were looking at this from a bearish point of view, and you totally can, because you remember I'm actually quite happy buying Japanese yen this time of year. It's just I sort of flipped a coin on Sunday and said, well, we were up here, maybe we'll come down into this zone and head up. It's not like you know, a social statement or something, right? 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 So it's one of these things where you can be a bear. So we described this as if you were a bear, what would you do? And we said it would come up to the central and drop like a ton of bricks, right? And that target being down here. Okay. So if it rolls over now, I will get out. Okay, so that's what I got to watch in New York here. If it rolls down, if it rolls over now, so let's say it comes up, tickles 86 and then drops, then I figure we're on our way down here and I need to bail. Okay, that's all. And if it doesn't, I'm still on the S pivot. It's okay, man. Just chill out, relax, right? We've challenged the 55, which was one reason, and so on and so forth. So, now we have a bottom. Now we have maybe a higher high, not quite yet. I might be able to work my way out of this. It's not a gamble or anything. So that's that. But notice the whole or a big part of our conversation yesterday is nobody knows, right? Nobody knows what's going to happen. You will need to make a decision on what team you need to trade, right? Who do you trade for? Are the Bulls or the Bears? And it's these things where you need to buy at the bottom, right? So I bought off the weekly pivot. And remember when you buy, so the ent the entry here, so let me back out. You can see there is a role reversal. It's not the worst buy in the world. But also remember when you buy, the spread is above your trigger. So I pulled the trigger like at the weekly central, right? Cool. That's what you're supposed to do, as close to that as possible. I could have waited a little longer, but I had to go to bed. I mean, come on, right? I had to go to bed. So I could have waited a little longer, or like I said, I could have put half here and put the other half here as a working order, because I did physically pull the trigger. Then I could have put half instead of a full, put 0.5 here, and then leave this as a working order. But then the flip side, you need to always ask yourself, okay, great, if I'm a bull, I know where to buy, but where would a bear sell? Because if you can answer that question, you know areas of which your risk will increase, right? You should know that your risk will increase near the weekly central. Why? This is how I predict the future all the time. Well, why? Well, because if I was a bear, that's where I'd sell, and there's plenty of reasons to be a bear. So if I was a bear, I'd have an order there, and boom. And it looks like there were some bears. And I told you when we were down here, it'd come up here, and if you were a bear, if you don't sell at the weekly central, then you're just not a bear, or you're just clueless. So it went up, and guess what? There were some bears there. Cool. It's the same thing. Like, why would I bail now if we get up near this 86 and we start getting green candles? And because I'm a bull, you can see I'm losing some money. It's not a whole lot, right? What am I losing? 50 pips, 40 pips, right? Well, because I got to keep my eyes on the prize here, okay? And the price action that is already predicting heading to 84.50 or 84. So if we're at 86, we can't head north, and I don't want to stay in it because it'll drop 200 pips. Okay. So if this fails, if this fails, I bails. Okay. So how about something like I can do it this way, right? Or I can do it this way. Okay. Right? MT4. Skip MT4. Anyways, and I got myself in a similar situation here. Okay, I bought at the central, and I forget what happened here, but it's not quite exactly what I wanted. One of these was a mistake. But this one, I think what I thought I was doing was one at the central, one at the M2. And for some reason, it didn't go down that way. So here we are. One's profitable, one's break even. But what is the trade plan? Remember, this is all set up from not yesterday, New York, Sunday's Asian session. So this goes back to Sunday, my time. So what was I doing? Well, you were watching the football game. I was watching the football game and trading. So my trade plan is this. Okay. Now, once again, I have no problem being a bear on yens this time of year. Okay, I have no trouble whatsoever. But it's sort of my style, right? It's my style to say higher high predicts a higher low. Higher low gets me weekly central, weekly M2. So I'm long and strong with the target heading up closer to 84. So buy it at 81, take profit at 84. Right? You got it? You're looking sort of bull on Kiwi. Well, I'm long. Yeah. But it's just a trade. Right? That's the whole thing. It's just a trade. What am I going to do? Sell a higher high? Okay. So one of the things I taught you is on Friday afternoon, if you're up above the red zone on a Friday afternoon, you can sell it. And if you're below the green zone on a Friday afternoon, you can buy it. And you're heading back to the central. Or better. Once again, it's a counter trend trade. It's the only one I have. It's my only counter trend trade. Yeah, Mel, I mean, they're not all my live trades. And I do from time to time, right? This is my fun account. This is my play account. Um, I do from time to time, but what I find is people get hung up on it and they stop learning and they just like, I don't know, they just rely on that too much. But from time to time, I'll throw it out there if it makes sense. I don't know. All right. Get back. South African central bank leaves interest rates unchanged at 7%. That's expected, though. The Nigerian central banker says the economy is still in recession. Well, oil be. But the South African central banker says This was before the interest rate decision. Data points paint a bleak picture for the fourth quarter. Oh my God. How sad, right? It's sad, right? It's scary. Like the leaders of the country and the economy tell us everything's going to be okay. Well, actually, things look quite bleak. You're like, what? Dre says, what? Oh, yeah. So, yeah. So, anyways, uh, yeah. So it's interesting to hire government officials to take care of things and then find out everything sucks. What a frustrating thing for the people, huh? Right. Okay. So, yeah, that's that. Ay, 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 ay. Um, can't see oil to the right, so we're just going to have to peek on it. I don't know what happened to this platform over there. New York. So how did I do here? Apparently there's a bottom, up, down to the roll reversal, and then up. Now what actually happened was up, down, and then up. But the guess was this line here. So what we're talking about is this line versus this line. But either way, it was going to go up to, I don't know why I have here, but there. So how'd it go? Now the interesting thing, okay, the interesting thing, guys, is we were bearish on this. This started at a sell at 55, then it went to 54, right? So anyways, like this one here, down, 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 then back up to the top of the range. But then we have it coming back down to 52, if you remember. Double bottom at 52, predicting a higher high, which you buy the dip, which you would use a roll reversal, and then it would go back up, right? And if you could see, let me zoom back in. I just thrown down this as a roll reversal. I guess if I used, because it's always a guess, if I had used the top of the wicks, it did it, right? Up, down, up into the target. Okay. Now, I think it's interesting that this area that I originally had as the support becomes the support. So this pattern almost fulfills itself again. We got to be careful now because this may soon become a higher low. If this becomes a higher high, then we're probably going back up somewhere. It goes to 55 and then maybe even 60 because this is multiple tests of 52. Okay. Okay. Remember, we always said down towards 50, but not likely. The next level of support is this at 43. That feels very unlikely. 50 seems fine. 52 we had as the support. Next level is 50 or 49. Same thing to me. Okay. But right now what we're doing is we're playing this range up here, which means 52, 52, 52. Next stop is back up here at 55, 56. And the next stop after that is more like 60. We don't even really have that on the chart, but I guess now we have to. 60 to 63. Okay. And something as subtle as that bottom could mean, right? This little bottom here could mean 60. It could mean 62. Interesting, right? Just a little bottom, but we're not through there yet. We don't have to get worried until we're testing, this whole area. And it's truly more like 55, but that's the next level. But even a higher high than this or a higher than that turns us from market bears to market bulls or just out. Okay. What can you say? Like, did you see all that good PMI data out of Germany, out of Eurozone, out of France? Do you see the positive data out of Japan? Okay. And so if that data is enough to pull this up to at least retest 60, break through 55 and get us to 60, how are you going to trade this through the foreign exchange market? Buy some kitty cat. Now, CAD's been weak, so you got to tiptoe into that one, right? Remember, there's a whole skill to buying a falling market based on your alpha. Okay. What the heck is this? All right. So, anyways, here's our levels. Looks like I've already done this for you. Does this look bullish to you? Are we at support? What do you think? Is this a coincidence, guys? The 8479.3 is our bottom. What do you think? Is that a coincidence? I dropped from a 4-hour chart to a 5-minute chart. I don't think I'll be able to fit it now, but let's try it. Look at that, guys. What do you think? Coincidence? 1-minute chart. Not a chance, right? So what is that green line that stopped the falling knife? Monthly support. Monthly support 1 pivot point. MS1. Huh! Monthly support 1. It's a support pivot point. What a coincidence! So does that mean buy? Well, it means you can buy. It means it is support, but you better be careful because you're going to be the first one in, and you never want to be the first one in, really. You do not want to try to get into the business of outsmarting the market, okay? Because you'll be the only one in the market long, right? You know the saying that the market can stay irrational longer than you can stay solvent, okay? But could you be sitting there on the 5 minute chart thinking it might go up, it might go up, it might go up, it might go up, it might go up? Okay. And I don't know, this is a 5 minute chart. What would you think of a giant bullish engulfing candle followed by a 618 Fibonacci retracement? You weren't expecting it here. You weren't expecting it here. You were not expecting it here, but you're expecting it here. That's kind of interesting, right? Once again, a total random occurrence, right? James says that's why you need alarms to text you. Absolutely. And then pretty soon you're going to find yourself in a sporting goods store trying to buy those sweatbands that basketball players wear on their forearms. And you'll buy one so you can slip your cell phone under the sweatband so you can sleep at night. And if your alarms are triggered on your trading platform, you'll get a text message. You'll have your phone on vibrate as to not to disturb your spouse. And it'll vibrate and you'll feel it on your arm and you'll wake out of bed. Then you'll reach over to your lamp table, to the table next to your bed, your side table, and grab the headlight, the lamp, the flashlight that goes over your forehead. So you can walk through the house, maybe open the closet door, put your sweater on and your lucky sweatpants, walk through the house into your home office, check the charts. If it looks like the market's moving, go make a cup of coffee in the kitchen, and you don't even need to turn the lights on. Yeah. How to survive, right? How to be a currency trader without having your spouse kill you by Wayne McDonell. By the way, high five, dude. You know what this is? See, these are all the tools that a currency trader needs. Look at this. Oh, 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 right there. Oh, woo. Ah. So the reason I have this is I meditate every day. I was listening to a clinical psychologist and his perspective of positive reinforcement or positive therapy, it's called. And he would recommend what I do, and it's not necessarily meditation because I don't envision myself floating through a golden triangle in a world of clouds. I don't know what kind of moron does that. But what I do apparently is called mindfulness. So I meditate every single day and I focus on my work and my task and I organize and I clarify what I'm going to accomplish and I cut the fat, the things I just can't do or shouldn't worry about. I just cut that and throw it away and it doesn't exist to me anymore. I can't achieve it today, so what's the point? And I have mindfulness, but it also means, and I do that in the shower. So I do that, and my back gets covered in hot water and dries out, and so I need a back scratcher. So do you need a back scratcher? Probably not. Should you have mindfulness about your trading? Do you think about your trading for at least a half an hour before you walk into your office? Right? I do. Honestly, I meditate every day. And I think about the markets, I think about trading, I think about seasonality. I'm thinking about things like, is the yen strength over? And I think about that. What has occurred in previous years? Last year, the yen strength stayed a long time, but many years, the yen strength ends about the third or fourth week of January. It's followed by some yen weakness, but not for very long. So I'm trying to think, well, we're in the third/fourth week of January. The yens could go up. Why would they go up? Well, maybe they go up based on the Trump presidency, and there was an initial rally when he was elected. Um, Maybe the idea is that there's some stimulus going to come soon, or maybe he's going to cut taxes, which would rally investment. So we didn't have that last year. We had a Fed that was backtracking and stumbling over its own words. Well, we don't have that this year. So maybe we are closer to the yen strength, right? And I start thinking about these. Well, I know CAD yen's heading down. I know pound yen is sort of at neutral support. Euro yen, not sure. Aussie still on the 21, right? The daily 21. Kiwi still not necessarily bearish, but trying to get bullish, and still not at the 55s, but still kind of riding the 21. So all of a sudden I think, well, maybe in this third or fourth week, if I have an opportunity to get long on Aussie and Kiwi because they're the least likely to go bearish again, can I get myself a weekly swing trade at the Sunday Open? And by Monday, you see I'm long Aussie and Kiwi. Why? Random occurrence? No, I thought about it for probably, I don't know, 6 hours over the course of the week. And other people, they get to their charts, they're like, oh, I wonder what's going to happen today. No, I'm right. You need to be hours, days, weeks, and sometimes months in front of the market, right? And that's why I have a back scratcher. Da-da-da-da. Because I do that meditating in the shower. I know. I don't know. I don't want to know what you do in the shower, but that's what I do in the shower. Cool, right? So, CAD yen. I wonder. Well, I don't want to get in this yet based on what I described on the Aussie and Kiwi, because Aussie and Kiwi were still above the 21 or in the 21, but not the 55, right? CAD yen has made a lower low when some of the other commodity currencies have not made a lower low. So other commodity currencies are trying to rally. Maybe they're not rallying, but they're trying to. So which one do you tiptoe into next? Well, if you believe oil is closer to, let's say, short-term bottom, this being 52, and now we're on our way maybe higher, and if that pattern puts us to 55 or above, closer to 60, what happens to kitty cat? Well, you go into the daily chart and you say, well, is it bullish? No, it's not bullish. Okay. Is it at support? Well, 55 and the monthly S1. Okay. Did it react to support? Oh yeah, drop into the 4 hour. Oh yeah, it looks like we came down and actually touched it and then immediately rallied, right? Immediately rallied and did a micro and then macro fib north off exactly the 618. Tells me, all right, somebody's in the game. It's not just a hypothesis now. Somebody's in the game and someone's playing the cards, huh? 618 predicts a 1382. Oh, well, we missed it by 20 cents. Okay, but you're like, oh, all right, there's some plausibility here, right? Okay. All right, so at what point should I decide to get in on this one? Because remember, I'm long two commodity currencies already. Why not more? You see what I mean? Richard says, well, you can buy now. Well, my point with that is you're so late. You understand, like, the buying opportunity was 100 pips ago? Good job, Nick. Right? I'm trying to teach you how to think ahead. If you're buying now, you're 100 pips late. How does that make you feel? Oh, no, wait, not 100 pips. I thought this was 84. All right, so you're not 100 pips late. Uh, but this isn't, I don't know. I don't know. I guess, I don't know. I guess you got to make decisions, right? Make some decisions. I'd rather you watch this drop. How about this? Let's do it this way. I'd rather you watch this drop from 85 and say, I'm going to pick it up around, all right, this is 85.50. You see it dropping back towards 85 and you say you want to buy it around 85.00. You measure, you find a 50% fib at 85.17. Turns out it's 85, yeah, 16.8. So I don't know. I want you to pay attention a little more, right? Do things like 5/8 crosses north. You're anticipating it maybe as you get closer and closer and closer to 85.00, right? I'd rather you be long sort of down to here. Oops. Okay. Thinking about something now to me is a little late. Okay. Maybe you're this next dip. I mean, I don't know. Yeah, it's a little late. I wouldn't do it because I just showed it to you. Okay. Okay. So for example, does this make it a little easier? How could you possibly know it might go up? How could you possibly know this might go up? Bearing in mind, this right here is monthly S1. The green zone is where bears get out. Huh, that's interesting. Bears get out. And then if you get out on a Monday or Tuesday, what's the target? No, not WM3. Central pivot. Okay? By hook or by crook, sometimes it's easy, sometimes it's not. It might have to go up, down, up, down, up, double bottom, up, down, up, down. But by Friday, the theory is you should touch the weekly central. That should. Very often it does. How about that? Because the bears get out. Why? Because they were supposed to. They hit their target Monday night. Monday! They hit their weekly target Monday night. Well, so now what are they going to do? Yeah, but so I told you early in the week, great. So that's my rule. But how do I justify that to myself? Because remember, like nobody knows. I make this nonsense up because it's my observations, right? So how do I explain that to myself? Well, they hit their target for the week. They're done. So like what's the technical analysis to say it's going to head down to 83.65? There isn't any. Not according to pivot point theory. Pivot point theory tells you need to take profit like they did here and like they did here. What was the one I just explained to you? If you close north of the red zone on Friday, if it's or near the end, not close, but you're about to close, that's the counter trend back to the central, right? If M3, where it opened on this particular, right? If M3 is your high, what's your target? M1. Look at that. You understand? That's the pattern I put in my book 8 years ago. That if that's your top, that's your bottom. Killer, huh? What's this? Right? This is the sell zone. This is the target. Spooky, right? So anyway, so now you're done on a Monday. Now what? Well, all these guys are supposed to take profit, and they're done. Where do they do it the rest of the week? Who cares? They're riding roller coasters. They're fishing with their grandchildren. The other day, or about 3 weeks ago, I suspected a guy of making a big commission on something that I was trying to get. So I called the guy's office just to confirm to see if the guy had done the deal, and I was going to try to get like information to figure out whether he did the deal, whether he got the commission, whether he did, whether or maybe the deal's still live, that kind of stuff. So I call. It was a Friday morning. I call the secretary to see if the guy's in the office. And again, I don't know if he did the deal. I suspect he did the deal. But if he did the deal, that means it's not available for me. But if he did it, he made like a multi-million-dollar commission, right? So I called the secretary. Guess what I learned? He's on a flight to Las Vegas. Yeah, no joke. Oh, I'm sorry, sir. I can't get a hold of him. He's on a flight to Las Vegas. I'm like, yep. So, did he close the deal or what? If he closed the deal, he just made a couple of $1,000,000 easy. Maybe more. What do you think? It's cliche, isn't it? Boom! You just made a $5 million commission. Boom! I'm leaving. I'm not at the office Friday. I'm going to be at the Vegas. I'm getting massages. I'm having drinks. I'm going to fights. I'm going to gamble. I'm going to, right? God. So I hung up. Deal's dead. Obviously, it's over. But, how about this? Somebody just has been short this for 3 weeks. And then on a Monday evening, hits the weekly target. Boom! I'm going to Vegas, baby. Woohoo! Dropped it at 88. I'm out at 80, 85, right? 300 pips. Tell your mom, I'm out of here. Boom! Right? That's what they do. That's what I envision. They're just like, got it, weekly pivot, go to Vegas, smell you later, and they take the rest of the week off, and they're getting massages, you're having steak dinners. Oh, lobster. Wait. Is it Atlantic lobster? Oh, I don't eat Atlantic lobster, right? Get me some other kind of lobster, right? And they're living the life while everyone else is chasing. They did what they were supposed to do. Wow, they shorted a double top at the weekly M3. Huh. Wow, they're so smart. That's crazy complicated. So anyways, now they're done. Hero, right? So now it's a counter trade back into here. So without further ado, what kind of lobster do you eat? You like the stuff from Boston? How about Caribbean spiny lobster? Yeah, you go with the Cape Cod stuff, huh? The giant claw lobster, right? I don't know. It's just you earn it, right? Right? Earn it. How do you earn it? Through trading? No, by planning. I teach my kids, because they're in everything, I teach my kids you practice. You win by practicing. I even have a shirt that says practice like a champion, but in the middle of the word practice, ACT is a slightly different color. So you act like a champion by practicing like a champion. And they know you go to the competition as a formality to pick up your trophy. Same thing, you want to get filthy stinking rich? Pulling the trigger is just a formality for you to pick up your money. You know what I mean? It's just a formality. So you got to plan it, you got to earn it, you got to deserve it more than the other person on the other side of your trade. So I'll see you tomorrow, guys, huh? Will you be here? Hope so. Looks like both my Kiwi yen trades are profitable again. Awesome. Hey, I had to think about it for 4 hours of meditation. So I hope it works out. I really do. I might be in it for the end of the year, but here's the funny thing. I already believe it's going to go up for a while. I believe I'm going to make some money, and I believe within 3 weeks it's going to tank again. Why? Why would I believe that? I've already spent 4 or 5 or 6 or 7 or 8 hours thinking of that move too. Oh my God. And I'm not joking. So I expect it to go up for a while, and then I think it's going to come back down a while, and then I also have an opinion on what's going to happen after that. All right. So like I said, you got to earn it, man. Oh, question, IT question with 18 screen seems what with 18 screen connection? What device do you use? No, I have a video card, Mal. No, no, no. They're not external. It's all in internal. You can do. I have a box, by the way. I don't know. There must be 20 external video cards. I have some in DVI. I have some in VGA. I have some in HDMI. But those are external video cards. No, no, no. But this computer you see here runs on four video cards. But I have a custom-made computer. I have a custom motherboard that holds the 4 cards. So each card has 4. And then these two up here, where I run the TV stuff, I actually run that on a separate PC. Okay, the stuff up here, I run that on a separate PC. So here, this is news from the UK. Over here is Bloomberg news from New York. So I'll switch to sometimes I'm watching news from the Middle East, sometimes I'm watching news from Asia, sometimes I'm watching news from Canada, Eurozone news. Well, right now this is BBC News. So anyways, so I'll run those, but I run them on a different PC to prevent my CPU from slowing down or, memory hog and all that kind of stuff. So I have 4 video cards on my motherboard running 4 screens each for a total of 16, plus 1 on this side of my monitors running 2, and that's for that. But I have the capability of running. I don't know. I could do another row if you wanted, right? I could put another, 6, right? I could put another 6 up there, but uh, I don't know. I don't really need them. I'm a simple guy. 18's enough. Yeah, it's too high. Well, I have this chair. I think it was $1,500, but I have this chair. You watch this. It's all steel and beautiful leather. You walk in my office, it smells like leather, even though it's one chair. Watch this. Oh, I already have it out. Or maybe I don't. Oh, yeah. Here we go. Ready? I don't know if you caught that. The whole bottom of the chair slides out. So often I slide the bottom of the chair out. So, and my feet are basically up off the ground. So my feet are about a foot off the ground underneath my desk. My chair slides forward. This leans back. The neck rest is actually holding my neck up, and I'm not looking forward. I'm looking sort of like middle screen. Okay? So my face is pointing this middle row. And I just glance down left or right. I can just kind of glance down for the bottom row, and I glance up for the top row. Okay, which is important because if you sit like a normal desk and you have a cheap chair, for example, and you're like this, you get neck problems. You get neck problems a lot because you're lifting your head and you're looking up. Versus what I do, I don't look up at all, and it's almost like a first class chair on an airplane. Like you're not laying flat, but your bum is way forward and your neck is way back. So you're partially laying down, and then this lower lumbar is in there. So I'm almost like I'm partially laying down, and my feet are up. Okay, and it's important though. Like I spend a lot of time here. I'm looking up, but I'm actually laying down. My neck is fully supported. My lumbar is fully supported. And my hips are forward, my feet are forward and up, my arms are held, right, are being supported. So I kind of just look and I watch and I think. And then I have another desk where I do homework for school, which I have to do soon. And it's on the other part of the office over there. So it's just kind of an interesting setup. Yeah, you spend a lot of time in the office. Yeah. Funny thing is, this used to be, so my house has maid quarters, and this used to be the kitchen. So I actually have like a sink and everything, which is good if you're making coffee and stuff. But I have a sink. Uh, there's a fan because there used to be a stove for the maid. So now, right over my desk, I have the stove ventilation system with which has down lights. It actually shines down. Instead of a stove, I built in a desk. So guess what? I have a different desk where you sit up properly. Now I can type or I can read, and there's direct light shining straight down, which is great for reading. But it's got the vent because it's supposed to like suck, grease or whatever out. Of course, it's never been used, but it was designed to suck grease off the stove. Well, there's no stove. There's only a desk. So guess what? You can light up a cigar, turn the fan on, and the smoke goes straight up the vent and gets pushed out of the house. So I can sit there, do my homework, smoke a cigar, and think about the deep thoughts that Harvard is giving me, right? Isn't that great? That kind of guy has a built-in fan over his desk so he can smoke cigars and write papers. Yeah. So if you can get a house with a built-in maid's quarters, you should do it, man. It's awesome. Yeah, it's only money, right? Yeah. So anyways, hey, man, got to roll. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Cheers, mate. Thanks for being on my team, man. Honestly, like, Forex would be boring, right? Forex would be boring. It gets really boring. You guys, encourage me to get up and do better every day. Here's our yen trade, by the way. There's your CAD. Surprising news. The Canadian dollar just got strong. Oh, I wonder what that was all about. Isn't that great? We knew that was so 30 minutes ago, huh? 45 minutes ago, right? Guess what? There's some amateur trader doing it now. Oh, I guess it's going green. I guess I need to buy it. Well, where was that amateur 45 minutes ago when we were talking about it? So anyways, peace on earth. May the pips be with you. May your profits be above average. And yeah, where was that amateur when we actually hit the monthly support, weekly support, right? You're supposed to be in at 85. Here we are at 85.60. And some amateurs just buying it now because they see the green candles. 60 and 70 pips late. You see where I'm trying to get you? Look at the pivot cluster of weekly and monthly support. Look at the price action of what's happening in oil. Put it all together in a trade plan. You should be up bare minimum 50 pips right now. And some other idiots just thinking about it, doing it now. 70 pips late. Think of it this way. A lot of you guys would be very happy just to take the 50 pip profit. Right? Guess what? Watch that daily 5 EMA. So if some idiot amateur is just buying it now, where's this going to be? Be careful, man. Be careful. Remember, you should be taking profit on 50 pips, not jumping in, right? All right, see you tomorrow. Love you, babe. Gotta jump. Cheers.